Today, I want to share my honest thoughts on buying 50,000 XDC tokens, why I think it's one of the smartest long-term moves an investor can make, and why I personally believe this project is still massively undervalued. Well, before getting into the discussion, please support this page by following up and sharing this video. Without much saying, let's get into the discussion. When you hear XDC network, what you're really looking at is a blockchain built for the real world. It's not about flashy marketing or viral trends. It's about utility, scalability, and real-world adoption. The XDC network was designed specifically to support trade finance and the tokenization of real-world assets, also known as RWAs. And this is huge because RWAs are the next big narrative in crypto. We're talking about the digital representation of physical things like property, bonds, commodities, and even government assets on the blockchain. Now, here's what makes XDC so impressive. It's an EVM-compatible blockchain, which means it works seamlessly with Ethereum-based tools and smart contracts. But it takes things a step further by using a delegated proof-of-stake consensus mechanism, a model that offers high-level security, faster transactions, and better scalability than many older networks out there. We're not talking about a network that clogs up during heavy traffic or charges insane gas fees. XDC is built for efficiency. But here's something that really stands out: the Layer 2 subnet system. This allows users to create sovereign and privacy-preserving sidechains that still inherit the mainnet security. So imagine this: a financial institution, a government agency, or a big enterprise can have its own private chain with custom permissions and rules, while still enjoying the strength and reliability of the XDC mainnet. That's next-level blockchain architecture. This is why I say XDC is not a crypto trend. It's a real blockchain ecosystem built for businesses, institutions, and the future of digital assets. Now, let's get into the investing side, because this is where it gets really interesting. As of now, XDC already has a multi-billion-dollar market cap, which shows how established it is. But here's the thing: despite being this strong and this real, Binance hasn't listed it yet. And if you've been in the crypto space long enough, you know what a Binance listing means. It's like the green light for massive exposure. It's the signal that wakes up whales, brings in institutions, and attracts global liquidity. We've seen it happen again and again. A solid project gets listed on Binance, and suddenly the trading volume explodes, the price rallies, and the project gains worldwide recognition. So imagine this: the day Binance lists XDC, we could see massive upward momentum. It's not a question of if it will happen, it's a matter of when. Let's talk about the magic number: 50,000 tokens. At today's price, that might not seem like a big deal. It might just look like a moderate investment or a small bag sitting in your wallet. But here's what most people don't realize. When you're holding something with strong fundamentals like XDC, time becomes your greatest weapon. In my opinion, this is one of those projects that rewards patience and conviction. If you hold through the noise, through the sideways market, through the uncertainty, you might just be one of the few who reap the rewards when the rest of the world finally catches up. So yes, I'm bullish on XDC. And yes, I believe that holding 50,000 tokens could be one of the best financial decisions an investor can make. Because in crypto, it's not always about who buys first. It's about who holds long enough to see their conviction pay off. So those are my thoughts on buying 50,000 XDC tokens. It's not financial advice, just one investor's conviction about a project that I truly believe has the potential to reshape how blockchain connects to the real world. XINFIN's XDC network is an enterprise-ready, Layer 1, EVM-compatible, open-source, hybrid blockchain protocol specializing in tokenization for real-world decentralized finance. It uses a special type of delegated proof-of-stake, XD/S, for consensus to ensure quick transaction times, minimal gas fees, and a remarkable 2,000 plus transactions per second, TPS. XDC network is backed by the XDC community, leading to the formation of the XDC Foundation, which was established in 2021 to promote the growth and adoption of XDC through collaboration with a community of developers, trade experts, and content creators. XDC network is a high-performance blockchain platform built for enterprise use in trade finance and asset tokenization. It uses the XINFIN delegated proof-of-stake, XD/S, consensus mechanism, which involves validators performing a small amount of proof of work, POW, when proposing a new block to achieve consensus. This method ensures the network consumes minimal energy and is highly resistant to spamming. XDC's delegated proof-of-stake also uses real-time voting to choose a pool of validators who are responsible for the following: ensuring the integrity of the XDC network, converting transactions into legitimate blocks, keeping their nodes in sync with the network all the time. Reward mechanism. In each 900-block iteration known as an epoch, a checkpoint block is created solely for implementing reward processes. This block, referred to as the block signer, holds all block signatures. Block signers are responsible for tallying the number of signatures sent to the smart contract during the epoch, and rewards are based on the number of signatures associated with a masternode. Block creators are chosen in a circular and sequential order, ensuring every masternode holder has an equal opportunity to create and sign a block. In the current XDPRS implementation, if a masternode fails to create a block, there's a 10-second delay before the next masternode in the sequence takes its turn.